And here's a look at where markets ended a very busy week amid the threat of tariffs this weekend on Mexico and Canada, a flurry of executive actions at the White House, and a flood of earnings reports and the Federal Reserve decision holding rates steady. But take a look at January. Stocks ending the month on a high note, and that traditionally means a good year for the markets. I want to bring in Crossmark Global Investment CEO and CIO, Bob Dahl. Bob, it's always great to speak with you. And you say that we should feel good and positive when it comes to corporate earnings for the year, and also the fact that you do have a new administration in place.
All accurate. Look, we're in the middle of fourth quarter earnings reports. They started off with the banks, which were off the charts. Since then, pretty good. I mean, there's some things we can pick on, but as long as the economy's okay, earnings will be okay, and that's what stocks are watching carefully, especially at these elevated multiples.
Well, next week we're going to get the jobs report for the month of January. You say the slow process of higher employment continues. So is the jobs picture something that you're going to keep a close eye on?
Absolutely. There are some signs that some of the pieces inside the employment reports are weakening slowly. Don't want to alarm anybody, but we need to watch that carefully, because as the jobs go, so go the consumer. As the consumer goes, so goes the economy.
Going back to now this first year under President Trump, you say that the S&P 500 produces positive returns in the first year of a new president, and that we've seen that trend in 9 of the past 10 times, presidents, if you will. But let's dig deeper into this. Is this a deregulation story? Is this a tariff story? What do you think, an energy production story? What do you think is really going to boost the economy this year and really boost the markets?
Yeah, the easy answer is yes, meaning all of the above. The number of things that President Trump talked about on the campaign trail was a long list, as you know. What's he going to do? What's the order of priority going to be? We're worried right now about tariffs. Are they going to happen? Are they not going to happen? How big will they be? Will it be Canada and Mexico? Oh, where does China fit in? There's so many uncertainties, and central banks, starting with the U.S. Fed, are struggling with all that. In the meantime, deregulation, positive tax cuts, assuming they happen, will be good news for the market as well.
Well, the Fed, again, holding rates steady, maybe no surprise there. But do you think that the Fed is going to be as an important of a storyline this year compared to previous years? Because it seems like their other mandate, again, going back to employment, that seems to be where the focus is. And also the issue of inflation, which at this point, in particular with the December PCE index, which came out, showed that we've got really these numbers, and that's the Fed's inflation, their favorite gauge. That was the largest gain we'd seen since April of 2024. So there's a lot for them to kind of work through. Does it matter in the end to you when you look at markets?
For sure it does. Maybe it matters less this year than it did last year, as you point out. But the Fed's job's always difficult. And with the inflation numbers, I'll use the phrase remaining sticky, our view is there's no way inflation is going down to the Fed's 2% desired number absent a recession, which we don't see. So we think inflation will constantly be in the headlines and keep the Fed from lowering rates very much, if at all.
You also say that higher tariffs are not necessarily risk-free. What do you mean by that?
Yeah, it's, trade wars globally are generally never good news. In other words, if we think we'll flex our muscle and put a 10% tariff on somebody, they're not just going to sit there. They're going to come back and retaliate. Global trade wars are not good news for global economies. So we've got to be really careful how we use them.
All right. And also, too, when it comes to kind of that global story, you may have a discussion about, concerns when it comes to inflation in this country, in particular core inflation, as I mentioned with that report that we got on Friday. But at the same time, think about the global story and the inflation story that the ECB is dealing with right now. How much of effect do you think that's going to have on global equities? Is now a time to start to look for investments outside of the United States, or should we just keep focused on U.S. stocks and bonds?
Well, our primary focus, Cheryl, as Americans, should continue to be on U.S. equity markets. But the rest of the world's pretty important. The rest of the world is very cheap compared to the U.S. Now, valuation is not a good short-term indicator, but I see way too many portfolios that are kind of 98% U.S. and a token 2% outside the U.S. I would have more than that. So on weakness, I would add to non-U.S. positions slowly but surely. You don't have to be a hero.
Yeah, take a little time. That makes great sense. Bob Dahl. Bob, thank you for being here. It's always good to speak with you.